If you have been told you can't buy a home because your credit score isn't a perfect 700, I have a holiday surprise for you. For years, the 620 score was the brick wall for most buyers. If you had a 619, you were out, game over. But as we head into 226, the walls are crumbling. I want you to be honest with me in the comments. No judgment here. When was the last time you checked your credit score? Was it this morning on an app? Or are you too scared to even look because you think it's bad? Well, drop me in the comments if you avoid looking at your scores because it stresses you out. Today, for day 5 of our 12 Days of Housing Challenge with Kathy Sabater, we are unwrapping the new rules of credit. I'm going to show you how the mortgage world has changed and how you can boost your score in as little as 30 days to get ready for a January application. It's December 21st, and the big news is Fannie Mae and Freddie Mac have moved away from the strict hard minimums for many of their automated approvals. This means lenders are now looking at your entire financial picture, your income stability, your rent history, your debt levels, rather than just rejecting you based on 3-digit number. We are seeing approvals for FHA loans with scores in the 580s. We are seeing conventional approvals with scores in the 620s. The algorithm is getting smarter. It realizes that just because you missed a student loan payment 4 years ago doesn't mean you can't afford a mortgage today. Question for you. Do you pay your rent on time every single month? Yes or no? Because guess what? Until recently, you got zero credit for that. Now we can often use that rental history to prove you are reliable, even if your credit score is lower. Now here's the kicker. Just because you can buy with a 620 score doesn't mean, this is the catch, it costs the same as buying with a 740. You need to understand loan level price adjustments, aka LLPA. Current rates are holding in the 6 range, okay? But your score is determines your price tag. So let's look at a little math. A $500,000 loan, borrower has a 740 credit score, gets the prime rate. If it's 6.25 for that day, payment is roughly around 3,078. A borrower with a 640 score, because of the risk, the rate might bump up to 6.75, or you may have to pay extra points at closing. The payment jumps to $3,243. Well, that's a difference of $165 a month. Over 30 years, that is nearly $60,000 extra you'll be paying just because your score was lower. But would you rather pay $60,000 to the bank or keep it for your retirement? Type keep it below if you want to know more to get your scores up so you don't have to pay the bad credit tax. So while you can qualify with less, we want to get you to the nice list, right? To save you thousands of dollars. How do you move the needle fast? We use the 30% rule, your credit utilization. How much of your limit you're using counts for a massive 30% of your score. Here's the mistake some people make. They think I pay my bill, I pay it off every month, so I'm good. Wrong. The credit bureaus usually take a snapshot of your balance on your statement date, not on your due date. If your limit is $1,000 and you spend $900, even if you pay it off later, the snapshot shows you are maxed out. That hurts your score. What's the fix? Pay your bill down to $300, which is approximately 30% or less, 3 days before your statement closes. When the snapshot is taken, you look like a responsible, low risk borrower. This single trick can jump your scores 20 to 50 points almost overnight. Pull out your phone right now. Open your credit card app. What is your current balance versus the total limit? If it's more than 30%, you are hurting your own score, right? Without realizing it. What's another secret weapon? Experian Boost. In 2025, lenders are increasingly looking at alternative data by linking your utility bills, Netflix, cell phone payments, and you can get credit for bills you're already paying on time. It's like getting a holiday bonus for being a responsible adult. But here's the biggest mistake I see people make. People try to clean up their credit by closing old accounts. Do not do this. Length of your history of your credit is about 15% of your score. So if you have a credit card that you've had for like 10 years and you close it, you just erased 10 years of history. Your score will tank more than likely immediately. Cut up the card if you want, but keep the account open. Have you ever closed an account and seen your score drop? Tell me the horror story in the comments and let's warn others. Before you make a single dollar, right? You move a single dollar or close a single account, talk to a professional. As a lender, I have access to what if simulators. I can plug in your report and say if you pay $200 on this Visa and $50 on another card, your score could potentially go up 28 points. It takes the guessing game out of it. Your credit score is a snapshot, not a life sentence. With the new 2026 rules, home ownership is closer than you think. So, what's your 5-day challenge? Use any of the 3 credit bureau sites or your banking app. Look at your credit utilization percentage. If any of those cards is over 30%, that's your target for this week. Comment credit below, and I'll send you my 30-day credit rapid rescore checklist. I'm Kathy Sabater, and let's get those scores climbing. I'll see you tomorrow.